Hi, everyone. This is Tim Melvin of the Tim Melvin Deep Value Report and Banking on Profits newsletter, coming to you from another nice day down here in Central Florida. I've got a couple football games on, keeping track of the baseball final day of the season, as well as catching up on a little light reading, but wanted to take a couple minutes and get the weekly video out. It was certainly a fun week, wasn't it? Market was all over the place. Big down day on Thursday. Nice snapback rally yesterday. It ends up goes in the books as a down week. 1.5% for the S&P 500, down a little over 2.2% for the All World URTH ETF fund that tracks the MSCI indexes, and the QABA, the ETF that tracks our little community and small regional banks, actually fell 3.27%, which is kind of interesting to me because adding the filters and screens over top of it that we use, we actually had a little tiny plus week in the banking on profit portfolios. But anyway, everything energy and mining related, sorry about that, this week just continues to get absolutely blasted. These stocks fell, and they fell hard during the week. There's some incredible bargains in the space right now. I'm seeing some quality companies trading at 75% of tangible book value. So either these things are really, really cheap and are going to recover over the next couple years, or we are on the verge of the largest global depression in history, and it's going to last for an unbelievably extended period of time. And there will be massive write downs of all mining and energy related assets. I don't see that coming. I don't think we're on the verge of some massive new alternative energy future that's going to do away with fossil fuels, or that we're going to go into a global deflationary spin that will make gold and silver and such absolutely worthless. So my bet is that these things are very cheap. In 5 years from now, they're going to trade at several multiples of the current price. Now, it's going to take a strong stomach and a long time frame. Okay, you've got to think like a private equity investor and not a stock trader when you're buying these things. You're buying them for the price in 2020, not necessarily what they do over the next few weeks, because you're probably going to get an opportunity to scale in lower before all of this is over. So the other big news of the week, of course, is Bill Gross leaving PIMCO and going to Janus funds. And this has created all sorts of speculation about what impact it might have on the bond market. I saw one of the talking heads the other day say that, hey, PIMCO could lose as much as 1/3 of its assets that will walk out the door because Mr. Gross did. And this could create all sorts of selling in high yields, corporate bonds, and mortgage related securities, to say nothing of the U.S. Treasury market. They are the largest bond firm on the planet. It'll be interesting to see how it plays out, but I'll tell you what it definitely is. If I was still a retail broker, I'd be a pretty happy guy coming into this week, because you can just bet that the trade of the flavor of the week at a lot of brokerages across the country is in the midst of the uncertainty of what's going on at PIMCO. Sell your PIMCO closed-end funds and replace it with an alternative fund. I think we're going to see quite a bit of that happening. If you have PIMCO bond funds, folks, don't do anything rash. Sit down, evaluate whether or not it still meets your needs. Bond funds are probably a bad idea in general here, but don't rush to sell just because Mr. Gross left. Make an informed decision on this stuff. Sit down, think about it, go through the holdings, and think very carefully about what you might replace that with. So the other chatter is this the start? And this was just really prevalent Thursday evening, calmed down a little bit yesterday. Is this the start of a massive correction? Are we finally going to have the big pullback? I mean, after all, it's been 2011 since we had anything that we could really call even a correction in the market. So it's over 3 years now. I don't know. And really, that's the only honest answer. Anybody that gives you a different answer is just practicing prognostication, not don't trade on it. It's you just don't know. We're only about 2% off of all-time highs still. There's been no massive wave of creation of new safe and cheap opportunities. Look, I'm in the camp that says, please let it pull back. I need it to pull back. I want it to pull back, but I can't predict when it will pull back. We're just going to have to sit here we got a lot of cash because of the lack of opportunities. We'll sit here and react to what actually does happen instead of making foolish predictions about what might happen in the stock market. Now, the other big news from my point of view this week was the Community Bank Conference put on by the Fed and state banking commissioners around the country in St. Louis, Missouri this past week. Almost all of the speakers struck a very common theme. Everybody is concerned about the regulatory burden and the cost of compliance and the need for regulatory relief for the small banks. Whether or not that's actually ever going to happen or just be a nice talking point remains to be seen. But the costs are definitely having an impact on the industry. We've talked about that quite a bit. Now, they released a report along with the conference, and it's called Community Banking in the 21st Century Opportunities, Challenges, and Perspectives. And there's some neat information in it. If you're on our list, it went out to you if you're a subscriber. Yesterday in the reading list, so please take the time to sit down and go through that. It does a nice state-by-state breakdown of community banking industry, by the way. But there are some quotes in there that are pretty interesting that you should be thinking about. 21% of all banks expect to receive an offer to buy their bank next year. That's up from 11% this year. So that consolidation trend that we talk about all the time is starting to consolidate. By the way, another 20% said they intend to make an offer for another bank in the following year. This is real. This is happening. They're going to be done at premiums to the current levels of book value and the current market price of these stocks. So there's an awful lot of money to be made, and it's going to start to accelerate from now for many, many years going forward, is my belief. Just some of the quotes from the report. One of the bankers in one of the surveys said that management fatigue is an issue. Another banker put it more bluntly. He said he's getting out because banking is just not fun anymore. That's been a common theme of the small bankers that I've talked to over the last year. It's a very difficult business. A lot of them are looking to cash out, take their money off the table and move on, and that creates an opportunity for us to cash in on the small community and regional banks. Now, there's still a lot of opportunities in the space. Our buy list for the called the Senior VIP Service Banking on Profits with the weekly updates and portfolio guidance. We had 21 stocks on the buy list. That's 21 stocks that have safe and sound balance sheets and loan portfolios and are trading for 85% of tangible book value or less. That can be the core of a portfolio in a time when it's very difficult to find opportunities outside of the banking sector right now. I have no problem being very heavily over invested in regional and community banks. Our monthly service that comes out each month, the Banking on Profits Monthly, very clever name. There's dozens of stocks in each issue of small banks where they're buying back stock, raising dividends, increasing profits, where there's activists are buying the stock to try to force a takeover or a sale of the bank, where insiders are buying because they're so very confident of the future and of a higher stock price in the future. So there's still plenty of opportunities in the sector. If you're not involved in this, you need to be. I cannot emphasize that enough. Banking on Profits is there. Hopefully you'll join us so we can guide you through the opportunities. But however you do it, get involved in these community and small regional banks. There's just a ton of money to be made. Okay, baseball, the regular season is over today. And believe it or not, there's still some races to be decided. We face the prospect of a 163rd game in both the AL and National League Central. We could actually see St. Louis and Pittsburgh have to do a play-in game, and then Kansas City and Detroit to determine the division winner and who gets the wild card. So, and there's a wild card race up as well in the American League where we could actually see Oakland and Seattle have to battle up head-to-head. So, exciting wind down to the season. My Orioles are in. We're either going to get Kansas City or Detroit. Either one of those is a formidable opponent. However, I am very comfortable that we will knock those Midwestern teams out of the game and move on to the AL division series, championship series. I definitely think we'll be there, probably against the Angels. Be an epic series, and hoping Baltimore moves on to the first World Series since 1983. What a fantastic time that would be. All right, college football, my Navy midshipmen lost. Quite frankly, I thought they looked horrible. Very shocked at the lack of offense in the middle part of the game. Can't win them all, I guess. So Navy loses. Notre Dame goes on to a very nice victory. Everett Golson completed, I think, 25 passes in a row last night. So that team's on track. They're going to be in the conversation about the national title. My adopted Florida Gators had a week off. And by the way, they've been playing this year. They needed it, and it better be a miracle 2 weeks of practice, or we're going to be looking at a new head coach at that program by the end of the year, I think. Now, for my friends in Michigan, wow. I don't ever remember a Michigan football team looking this bad. I think the coach, again, you're probably looking at a coaching change. Needs to be some huge changes. First time ever I've ever seen Michigan runs the ball a lot. They play a down your throat kind of football, and the offensive line, frankly, is horrible. I've never seen that out of a Michigan football team before. Of course, it's a good time to jump on the Michigan State bandwagon because they're actually doing extraordinarily well this year, and they could also very well be a part of that national title conversation before it's all over. But also expect Texas A&M to be there. They're the real deal, coming back to beat Arkansas in overtime yesterday. Anyway, we've got the NFL on today. The Ravens, I think, have a small lead right now, so we'll see how the rest of the day plays out. I intend to take a book, do a whole bunch of football watching, provided the wife doesn't come up with a whole bunch of chores that absolutely have to be done. Okay, October, this is a huge book month, folks. We've got all kinds of stuff coming out. You've got John Grisham, Stephen King, John Sandiford, Patricia Cornwell, Stuart Woods, John Conley, and Clive Cussler as just a few of the authors that have new books coming out. Patrick O'Shaughnessy on the business side, his Millennial Money, written from a value investor's point of view for millennial-aged investors, is coming out. This is supposed to be a fantastic new book. I'm really looking forward to it. Scott Adams has a new Dilbert collection coming out called Go Add Value Somewhere Else, which I love Dilbert. It's a great cartoon. If you ever worked in an office, you can relate to it. And then Thomas Meyer has a book coming out called Private Equity Unchained that looks at the private equity industry's role in institutional portfolios going forward. Sounds like a real geek fest, but I'm a real geek, so I'm looking forward to it. Anyway, we have just a tremendous flow of news starting this week. It's going to be a very busy week in the stock market. We'll see how it all plays out. Maybe we get an answer to, is this really the start of a correction or just another buy the dip opportunity? Either way, we're sitting here. We're prepared. We own a lot of community banks. We have some exposure to the energy, the mining sectors, which again we think is just way, way too cheap. And we have lots and lots of cash, so we're hoping it's a correction, but certainly not predicting it. Anyway, enjoy the rest of your Sunday afternoon, guys, and I will talk to you all next week.